Good morning, good afternoon, and good evening, everyone. Welcome to the webinar, Smarter Ways to Drive Excellence in ESG Reporting. I'm Ankit Shah, and I lead the product marketing team at Eka Software Solutions. Before I introduce you to the webinar, a few housekeeping rules. So the duration of the webinar would be 45 minutes. We'll try to answer as many questions as we can. Please be muted till the end of the webinar. If you have any questions, feel free to type it in the chat or in the Q&A section. The webinar will be recorded, so we need not take any notes, and the recordings will be shared with you by tomorrow. For any technical issues, you can contact me on this email ID. And yeah, so introducing you to the speakers. So as I see people joining the webinar all over the world, even our speakers, I think, have joined from different parts of the world. So we have Natalie joining from Europe, Shuchi joining from India, and Luis joining from Singapore. So let me give a quick introduction of the speakers. So our first speaker is Natalie Farrant. Natalie started her career as a corporate strategy at LK and McKinsey, and then as a global business leader with Western Union. Natalie currently helps organizations in achieving sustainable business growth by designing efficient and target business strategies. Our next speaker for today is Shuchi Nijawal. Shuchi is one of India's most accomplished multidisciplinary executives, leading the global sustainability and human resources function at Eka. She has been a driving force in steering companies' effort to deliver best-in-class solutions. Shuchi was also responsible for launching the world's first blockchain-based coffee marketplace. Shuchi has been working with Eka for the last 14 years and is committed to helping corporates achieve a greener and sustainable future. Our third speaker for today is Chan Jinwei Lewis. As a sustainability manager, Lewis leads the formulation of sustainability strategies and policies that are practical and fit the purpose of organizations. He is a certified sustainability professional from Massachusetts Institute of Technology. Lewis enjoys aligning his professional interest in sustainability with his personality of challenging himself and embedding innovation practices in his work. So with that, let's begin the webinar. So this is what the high-level agenda of the webinar would be. We would start with discussing some of the evolving global regulations of ESG reporting. Then we would be demystifying some of the key ESG reporting frameworks that are followed worldwide, followed by what are the key steps for ESG reporting. And towards the end, we would be talking more about how can we digitize the whole ESG reporting for a better tomorrow. So with that, I shall hand it over to Natalie. Natalie, over to you.
Thank you very much, Ankit, for the introduction. And good morning, everyone. It's a pleasure to share some thoughts around ESG reporting with you today. So first, I think as a starter, and as we get into ESG reporting, it's important to remember why it matters and why it is important for your organization and your company. So what should be top ESG goals for you and your organization at this point in time? The first is, of course, and that's the overarching goal, is to really track and measure the impact of your company on the environment, and in particular on emissions of greenhouse gases, and to be able to measure this in order to pilot your performance in that regard, and to be able to pilot your actions against it. And this matters because first, this will help you understand a number of operational risks and opportunities around ESG. And often we think of, okay, we need to reduce emissions, and that's a clear goal for everyone in the context of environmental action. But for companies, there are really also two very important dimensions that are sometimes overlooked. One is the necessity to build resilience to the effect of climate change and to be able to understand the risks linked to warming and environmental changes in your business, and the opportunity it represents if you are able to demonstrate to your stakeholders that you are able to deal with them and that you are able to take action against the environmental threats that we're facing. And so within this, the report to stakeholders is key because it becomes the way you can communicate your action, you can demonstrate your efforts and the quality of what you are doing. And this is an excellent way for you to start engaging the stakeholders in a different way around those topics, be they shareholders, clients, or end customers. So if we move to the next slide, Ankit, so what companies face today, and I'm sure many of you see this in your daily business, is that ESG measures and therefore ESG reporting is increasingly asked for by all the key stakeholders for your companies. This starts with regulators that essentially use regulation, rules, laws, directives to drive the behavior of companies to be sure that they contribute to meeting the goals of the Paris Agreement. And we're going to deep dive into this and to see that regulators have become increasingly active and increasingly precise in requesting companies to communicate and report on their efforts and how they handle their ESG impact. Then there's a broader demand from the public at large, including your end customers. And increasingly people understand the impact of companies on the environment, on biodiversity, on global warming, and they expect the companies they buy from to take action. And how do they know, how can they know that these companies take action if there is no reporting, if there is no communication around the efforts that companies make in this regard? Beyond this, and this also translates into investor expectations. Increasingly, asset owners ask for green financing, ask for sustainable finance investments, and they really want companies to be in a position to demonstrate and prove that they're doing what is needed for the environment. This means that if you want access to funding, you're going to be required to demonstrate that you take action against global warming, that you are resilient against global warming, that you take action to protect biodiversity, and so on. And finally, you have internal factors. Your employees will expect you as an employer to take these topics into account. Your management also is very likely to have a vision around this. So if we move on, you will see in that slide that the public in general, and so your end consumers, actually expect that companies and themselves will change the way they live and the way they work to tackle climate change. And so if you look at the map, this is the result of a global survey that has been conducted, where people were asked, do you think there's nothing left to do? That's the yellow part. And you can see that nowhere in the world do people believe there's nothing to do about climate change. Everyone expects action. Everyone expects things to happen. And then you see the blue countries are places where people primarily believe that technologies and innovation will help us handle climate change. And in green, you will see expectations that the way we live is going to be the primary driver. And you see that overwhelmingly the map is green. In almost all the world, people actually don't expect climate change to be handled through technology and some magical changes or very quick changes that will help address the issue. They really believe that we need to start working and living differently. And this will translate eventually into the expectations they have from companies and into their buying behaviors when they come to choosing products or services from companies. So beyond the public at large, a very, very important set of stakeholders for organizations is now extremely focused on environmental impact and action against climate change. And these are the people who invest in your companies, the people you can get funding from to boost your growth, to boost your activities, and to get the money you need to develop your business. So first of all, we're going to see 3 quotes. And you will see first on the left, Larry Fink is the chairman and CEO of BlackRock, which, as you know, is one of the main funds in the world, handling over hundreds of billions of dollars in investments. And his message is very clear. The focus on sustainability is not because we have environmental concerns, even though that may happen also beside the pond, but because it is actually at the core of the sustainability of the businesses themselves over time. So the reason why, as an investor, he is increasingly going to challenge companies to demonstrate how they tackle climate change is not only because he believes in the environment as a way to go, but really because he knows it is increasingly an absolute pillar for companies to demonstrate their ability to deliver the services and to continue to operate in a climate changing world. Similarly, you see here in a report from Deloitte, which you know as a major global consultancy, they surveyed shareholders in companies and looked at how they make their investment decisions. And they look at much more than the balance sheet. They're really looking for facts and for measures that will help them identify companies that really integrate the ESG dimension into their business model. So companies that are able to report very clear facts, very tangible measures to demonstrate how they handle ESG topics really get an edge and really will have an advantage when requesting funding. And lastly, there's a message from EY, which goes in a very similar dimension. The requests are increasingly precise. So it's not just about saying, I'm interested in ESG. It's really about demonstrating it with very clear metrics and very clear programs that demonstrate how climate change is integrated into the company's business model. So if we move on, you will also see that regulators are being active and essentially move increasingly towards more and more stringent regulation. And the example here is in Europe, and this shows how regulation has evolved. And you see that in 2001, things were very directional. It was really about building a better life. Then in 2006, it moved to, well, let's go into action. Let's go into not just building a better future, but really what actions, what tangible elements can be done. Then in 2013, there was really the first attempt to structure the way companies communicate with the accounting directive, which then translated in 2018 into the NFRD, which was really the first main reporting directive targeted at large companies. And this target of large companies is not because they only expect large companies to work on their environmental footprint, but because they expect them to cascade down their environmental requirements and processes to their suppliers and stakeholders. So, and this then continued with then the EU taxonomy, which really classified investments and enabled companies to put themselves into a category of investments. And then eventually into the CSRD, which is now becoming the major reporting directive into the EU, which expands the scope of companies that need to report, and which also changes the nature and the quality of the ESG reporting to become much more precise. So you see that in the space of roughly 20 years, we moved from very directional vision of, oh, the world needs to be better, to very precise directive, including sets of requirements with very detailed types of information to be provided. And this is not going to stop. You can expect this to continue as a trend as we go. And this is not specific to the EU. Actually, globally, regulators take major measures to make ESG reporting mandatory. So within the EU, beyond what is done at the European Union level, there are a lot of actions that are taken by different actors at the country level, like the Bank of England, the BaFin in Germany. France also took some specific law in 2019. And they essentially apply the recommendations of the TCFD, which is a global task force that was created about 5 years ago to enable to have more and more standard guidelines. So if you move on to the very last slide, Ankit, you will see this goes beyond the scope of the European Union. In the US, the SEC has also issued very detailed guidelines around reporting, and the United Nations also created the ISSB, which essentially aims to eventually build a global standard that will be recognized by all to report on ESG and how companies tackle environmental topics. So this framework is really to give you the picture that all the people you deal with, all your key stakeholders, will want you to take action and to be able to demonstrate how that action works. With this said, I will pass on the word to Louis to give you more details around all of this.
Thank you, Natalie, for providing an overview for us to understand the regulatory landscape happening around the world. So for my part, I'll be sharing about the key sustainability frameworks and some systems available, and also what are some steps we all can take when it comes to sustainability reporting. So the first framework is the Global Reporting Initiative, which I feel is one of the most common initiative. And as you can see in the report, about 70% of the global Fortune 500 companies actually use these standards, whether is it with reference to or in accordance to such a standards. But I think that when it comes to frameworks, there is no best framework, but I think that we must first find what exactly meets the company needs. Because I think that it is important to whatever frameworks we use, there must be a particular purpose and we should not just use for the sake of it. But the benefit of using the GRI framework is that because there's so many companies who are using it, in terms of comparability, it is much easier. And so as you can see on this slide, there are actually 3 different types of standards: the universal standards, the sector standards, and the topic standards. The universal standards are more broad in nature. They tell a company how do you identify material topics, what are some things when it comes to remuneration policies, etc. But I think what is more interesting to me is the sector standards. The sector standards is something that is relatively new, and a few industries have already, GI has already created for a few industries, in particular, for example, the agriculture sector and the coal sector. For sectors such as the mining sector is still in the works in progress. So by using the sector standards, as we know what sector our company is in, we are better able to then find out what are some possible material topics that is relevant to our company, and we can refer to the topic standards to better able to identify that and therefore be able to measure that more effectively. Moving on to the next slide, it is on the SASB. So the SASB is a Sustainability Accounting Standards Board. So I think it's similar to what Natalie has mentioned earlier. SASB is now in the works of merging with the VRF, which is a Value Reporting Framework, and they have already consolidated into IFRS. And this foundation is overseeing the execution and implementation of ISSB, which is the International Sustainable Standards Board. And based on what they say, that the standards will be ready by about the end of Q2 this year. So what SASB does is that instead of GRI, which looks at the impact a company makes on the environment, SASB looks at how does the environment actually impact a particular company. In particular, it is more investor facing. Now, why do I say so? Because that in SASB, basically they identify topics which are likely to affect a company's financial performance and the long-term enterprise value of a company in the industry. So it is not a cookie cutter method. They actually look into 11 sectors and 77 industries so that it's easier and more specific to the nature of a company. Now, I've mentioned GRI, I've mentioned SASB. I wanted to bring across the idea of double materiality also. Now, GRI, as I said earlier, is more impact facing and SASB is more investor facing. So if you can see, there's actually an interlink between using both the GRI and the SASB or ISSB standards together. They should not, I strongly believe they should not be seen as competitors, but actually there's value in using both of them to provide a more holistic picture and to truly identify what exactly are the material topics for a company. Moving on to the next slide. The next slide is one of the more interesting one is TCFD. So it's the Task Force on Climate-Related Financial Disclosures. This one really looks into the risk and opportunities that climate and climate change can actually bring upon the company. There are 4 pillars and 11 indicators, and in each of the indicators, there are also best practices which TCFD actually provides so that companies can learn from what can they actually do. So this one is a concept of risk and opportunities. Risk, there's actually a mix of physical risk and transition risk. So physical risk can be things such as the impacts of floods, the impacts of droughts, etc. But transition risk is more interesting, where it looks at how do companies or how do countries' regulatory or policies can actually affect different companies. For example, the increased amount of carbon tax and the carbon policies or the change in consumers' preference to different products, in preference for more sustainable products. So I think that TCFD is I think increasing number of regulations and regulatory bodies around the world actually referring to it, and I see the value in it because it shows that besides the risk which I have mentioned earlier, there are also opportunities. How do we best make use of the current situation and find opportunities whereby we can grow a business? In particular, I wanted to bring attention to, let's say, even the governance pillar. I think it's important that the board has oversight on the different risks and opportunities a company actually faces, because then it is a top-down approach and then it's easier to actually spread the idea and the awareness of sustainability throughout the entire organization. Moving on to the next slide. This is Carbon Disclosure Project, or more commonly referred to as CDP. Now, it's not, unlike the previous three, it's not really a framework. It's more used for benchmarking. Why do I say benchmarking? So this is basically a survey. There are about, if I remember correctly, about 130 questions whereby companies can input across different areas, which is climate change, water security, and forestry. And by inputting the questions, there's a particular score being created. And the purpose of it is to be used by investors to inform their investment decisions and to look at how can they, because I think as what Natalie mentioned earlier, there's increasing number of investors who want to minimize the climate change risk in their portfolio. So by looking at the CDP scores, it will better allow the investors to actually understand, is this a good company to look at or not? So this CDP basically is free for all to use actually. You can go in to actually use the survey to actually check it out to yourself. Of course, if you don't pay, means you won't be benchmarked against the other companies. But it's good for you to know where exactly what are different regulators or what are different investors actually looking for. And I think that CDP, even though it's carbon, there's also an increasing focus on the biodiversity aspect. So they've also recently incorporated new biodiversity elements to it. And I think since we're in the sustainability space, for the CDP one, I think we all know that basically there is a need to actually be aligned to the different frameworks in place. So the CDP one actually has incorporated different frameworks like TCFD and GRI, and even the SDGs into it. So moving on to the next slide, which is on the CSRD. This is also not a framework, but this is more of a law that is being implemented into Europe. And I think Natalie also mentioned it earlier. CSRD is a law, and the sustainability related part is under ESRS, which is the EU Sustainability Reporting Standards. So this particular, although it's a European directive, even companies who are not based in Europe but have a significant presence or have a high revenue presence in EU will actually be affected by this particular regulation. So if you look at the slide here, basically they will have to, companies who are subjected to CSRD will have to report according to ESRS, which requires the disclosure of double materiality, the one I mentioned earlier about both inward and outward facing when it comes to material topics. And some examples of material topics are social matters, environment, even human rights issues in that sense. Now, I think CSRD also brings across the idea that the report will then have to be certified by an accredited independent auditor or certifier. So initially, we're going to start off with a limited assurance, but there is quite a high chance that CSRD will be moving towards reasonable assurance. So with that being said, I think it further highlights the importance of having credible and reliable data whenever it comes to our report. And while this may not affect us now, eventually, I believe that the regulations across the world will be strengthened. So it'd be good, as a good reference to refer to see what are the good best practices currently practiced in the EU region. So I know that was quite fast. I've given a broad overview of the different things which may, different frameworks, the different laws which may actually impact companies, regardless of where you are based. So moving on to the third segment now, which are some steps for ESG reporting. On this slide, I wanted to highlight that, I think ESG by name itself is environmental, social, and governance. There are these different material topics, these different factors. Actually, they are all interlinked. There is no way you can actually just look at carbon emissions and not look at, let's say, biodiversity. And there's no way that labor management should be forgotten. So even within the environmental pillar, I'm sure we have heard of the energy, water, and food nexus. There's so much interlinked nature in it. And so questions people may ask is that which particular matrix should I actually look at first? I think the question is, once you do a materiality assessment, which can be using GRI or any other frameworks, Once you find what is actually impacting your business the most, start from there, measure, and once you measure, you can then manage the different metrics and therefore improve your sustainability performance. Moving on to my last slide would be on some steps, which are some proposed steps for you to prepare your ESG report. I think as I mentioned briefly earlier, you have to first find out the requirements. What exactly do you want to disclose? What data do you have at hand? And this can be done through identifying the material topics and being able to identify the possible risk that the material topics actually entails. That can be done, for example, using the TCFD, or even in the different frameworks I've mentioned earlier. The pointers actually shows and exposes a company's possible risk. That is something I recommend you all to start on. Thirdly is the most important part, I think, is to collect and verify the matrix. To me, I feel that companies are maybe a bit find it a bit challenging to collect comprehensive set of data, especially when it comes to even scope 3 GHG emissions. But I think as long as we start somewhere, there is a good place, because there's always room for improvement, but it's important to start somewhere and not do anything from the beginning. And the fourth point is, I think this one is something that companies are often concerned with, is the following the regulations and compliance. So obviously, when you do a sustainability report, whether is it required because you're a listed company or not, I think we still have to maintain compliance. And lastly is to communicate. And it's one thing to put numbers in the report, but another thing to show the impact and to show investors what is the purpose of it and how does it impact the company in itself. So these are 5 steps you all can consider when you prepare your ESG report. So before I end off, here is a quick poll question for you to look at which steps of ESG reporting is the most difficult for you. And with that, I'll pass on the time to the next speaker, Fuji. Thank you.
Thanks, Louis. Ankit, if you could go back to the previous slide. Thanks. So now that we've understood the global regulations on ESG reporting, we've also understood the reporting frameworks, also understood the key tenets of the ESG reporting as illustrated by Louis just before I took over. We'd like to now look at how do we create more impact by measuring effectively the impact of the ESG reporting. How do we create that? Because all of us talk a lot about the data that needs to be collected. It is really vast because the number of metrics and measures that need to be crafted for ESG reporting itself are huge in number. There's about, on an average, 200 metrics that need to be reported on. And for that, there's a lot of supplemental data that's coming in from different sources, different stakeholders at any given point in time. That makes the task of understanding, acknowledging, managing, and then measuring the data that goes into the ESG reporting very difficult. So how are we going to keep our sanity while doing that? How are we going to communicate that effectively? That is the key tenet of what we are going to talk about next as a part of the digitalization of ESG reporting. Next slide, please. So when we look at a sustainability or a compliance officer that is crafting the ESG narrative or ESG reports for an organization, they are drafted by several questions and they have a lot of challenges that they encounter on their journey. So firstly, because we're collecting such a huge amount of data from different sources, is the data really accurate? Now you just understood that the CSRD data itself is going to be sort of mandated by a third party or validated by a third party to understand whether the data is accurate or not. So how do we ensure that the data coming in is accurate data? Then the sustainability officer definitely wants to understand that these different requirements are very different for different locations, for different units, for different parts of the value chain itself. How do they create such reports? How do they collect that information with minimal effort, because the task itself is daunting? Then how do we understand and get to the materiality assessment congenially? Where should we start from? Just as much as there's the positive that we are doing in terms of presenting information on ESG, there's a lot of carbon emissions. There's a lot of things that are happening on the social side that the companies could do better on. So how does a company present the negative information or the negative, the negative comments also in an appropriate manner, such that they could be looked at as areas of opportunity for improvement? How does anybody in the organization then quantify the ESG factors within financial reports? Because there is a part of sustainability reporting which carries financial risks as well. How do I, determine what is the right frequency of this ESG reporting? Of course, annually an organization does need to do it, but internal stakeholders, and a lot of times even the auditors, need to understand the right tenets of the ESG reporting in a more frequent manner. So what is that frequency? How does a sustainability officer decide that? And then finally, they, of course, Natali also talked about the carbon emissions. That is, of course, the biggest looming in everyone's mind. So how do I know the right amount of emissions across facilities? How do I manage them, measure them, and then ensure that going forward, I can reduce them appropriately? So these are largely the challenges that sustainability officer or a compliance officer that manages sustainability in certain organization always is worried about. Next slide. So when we look at an ESG solution, or when we look at an ESG platform that can help organizations in effective ESG reporting, making the task a lot more easier, there are these 6 key things that we look at. Is the solution comprehensive? Is it all encompassing? Does it capture all the 3 E, S, and G components of the reporting, or is it only comprising of one? Does it cater to all the different frameworks and standards, or at least a large bouquet of frameworks and standards? Then is it analytics driven? When we talk about analytics, we're not just talking about being able to collect data and present current data, but are there any models? Is there any AI that could help detect what could be the future footprint of the organization on all of its ESG parameters, whether it is good or bad? And if we want, or if the organization wants to get to carbon negativity, by when can they get to that carbon negativity using the ESG solution? So is the solution analytics driven? Then does it have seamless connectivity? We've all talked about, data, having the right veracity of data, and then the right data coming in from different sources. So whether that's ERP, Excel, HR, or multitude of different sources where the data comes from, is push and pull data and push and pull APIs for data built in technologically accurately within the system. That is really, really key for a good sustainability solution. Does it have, are you able to access it only on the web, or you're able to access it on laptop or a mobile device? Because a lot of us are mobile in remote locations, especially the folks that manage plants in very, very remote locations. They also need to have this access on more friendly devices, because a computer doesn't go everywhere. Right? Then is it extensible and customizable? Now, from Jan 2023, the CSRD directive has come into place. So now the older platforms, or the platforms that had older systems, are they now easily extensible or customizable to include the CSRD or the future directives, or they are going to reinvent the wheel? So any good technological solution largely should be able to be have some level of customization and definitely be extensible. And then does it have enterprise grade level security? All of this data is very confidential, both for a certain team and both for the larger set of the organization, because inter-team as well as intra-team security, both is very important. This is very, very sensitive data that we're talking about here. So of course, security needs to be top-notch for any enterprise-grade solution dealing with large data and large organizations. So I think these 6 comprehensively form a good set of requirements for a good solution on the technology side. Next, please. Yeah, so now elaborating a little bit more from the last slide, when we talk about comprehensive, right, whether that is corporate or the social sustainability, whether that's the environmental pillar of sustainability, or whether that's employee health and sustainability, health and safety, or other tenets, does a solution appear to have a unified solution across these different tenets? That is really important for an organization. Next slide, please. Yeah, so we talked about how a solution needs to be advanced and analytical in nature. So how does it help us in business insights? Because different user groups need to present different insights. Are they able to do that within the system? Is there an appropriate level of data sharing? Are there enough advanced analytics to help organizations see if there are any anomalies, if there are any simulations or scenarios that can be created, and if there are any algorithms that naturally can be applied within the system, right? So is how analytics driven the system is also important for us to see. And here you see on this, on the system itself, that there's a multitude of data that's coming in here, right? Whether that data could be from a CRM solution like Salesforce, or it could be accounting data or financial data coming from QuickBooks, Zoho, or Tally, or there could be information coming in from the SAP or JD Edwards or Oracle ERPs, or a certain machine or a device. I mean, mining companies use tremendous amount of machines and devices. There's a lot of agri companies also using them in the field. So is the solution connected to such devices, both for data coming in and data going out, right? A solution does have that high level of connectivity, but a good technological solution needs to have the ability to consume all of this data and then throw out the appropriate results. Then, as you can see here, very simply on this slide itself, that whether it is tablet, mobile, or whether it is the computers, all different types of devices can access the information in a simplistic format. So that is really important for the users of today, that there is multi-device access. And then, of course, how easily customizable it is. We've built a solution which is really no code and low code, which means that with very little, we are able to customize a solution according to a client-specific requirements, because like Louis also talked about, very sector-specific requirements that are there in the ESG reporting itself, right? So different sectors would require for the platform to perform differently, to attend to different use cases, in addition to what we do for the generic reporting as well. So the system needs to be easily customizable for that sector specificity. And then, of course, like we are compliant with SOC 2 Type 1, SOC 2 Type 2, as well as the GDPR and the CCPA. We have single sign-on and enterprise-grade security and encryption. There's a very high grade of minutely managed field-level security, role-based hierarchy. So all of this really helps organizations get the kind of faith in the system, because there is a very high grade security for an enterprise-based solution at this level. Now, when we talk about ECA's ESG solution, right, because while we do have all the other 6 tenets that we talked about, right from being comprehensive to having a high level of connectivity to being very secure. I also wanted to give a brief overview of the ECA ESG solution. Essentially, we're a cloud-based offering. It's a SaaS offering that caters to different turnkey visualizations, about 150 of such turnkey visualizations across a multitude of different frameworks. So some of the frameworks that we learned about today, all of those frameworks are in fact already configured in the ECA solution. We run on the Microsoft Azure as of now, and we have the ability to track, manage, measure, and subsequently help you gain very specific, meaningful insights across the organization, and also help you create simulations for the future within the ECA solution. And the promise for the ECA ESG solution is that through this solution, we will be able to help you in reduction of the data collection as well as reporting time up to about 50%. So if historically it's been talked about that companies take about 6 months right from the start to the finish of creating an ESG report, which means right from the genesis of the collection of data to the creating and crafting of the sustainability report. The promise is that we would be able to do that in less than 8 weeks, right? So it's less than about 50% of the time that we take from start to finish in helping organizations track, measure, and then subsequently gain meaningful insights through their ESG report. Because this is a single platform managing different variations of the ESG narratives, therefore, of course, the ROI is subsequently higher. Now, we have already, like I talked about, we have about 150 plus pre-configured turnkey visualizations and reports that cater to about 500 plus ESG metrics, very, very comprehensive across different frameworks and directives that are there right now. We use about 800 plus climate factors, but because the solution is really customizable, these can easily come in depending upon which sector you operate in, which country or region you're operating in. And then, of course, there's about 60 plus enrichments that we do. And when we say enrichments, it's really very specific modeling and formulas that are applied for each sector that are already pre-built in the system when it comes to you. So with this, Ankit, if we could just go back to the previous slide. Yes, thank you. With this, the whole key areas of solution, or the 5 key use cases of solution that we have, are carbon accounting and offsetting, ESG reporting and analysis, of course, being able to assess the suppliers to see whether the footprint of the suppliers is also manageable, as well as to understand the sustainability risk, whether financial or non-financial, and to help organizations create scenarios and AI models for future goal mapping, as well as assessing how soon can we become carbon neutral, right? So these are the primary 5 use cases that we're able to manage through this platform. And then I would like to do a couple of case studies for this group here. So there's a large edible oil leader in South Asia that we helped with our ESG solution. The problem statement that they had is that they essentially were struggling with sustainability reports using internal data that was scattered all over the place, multitude of different Excel spreadsheets, multiple different stakeholders. And therefore, by the time that they collected the data and it came to them, it was never in the same formats. It just took them about 1 month alone to try and gather the data, another 1 month to format the data in the format that the executive team kind of wanted for the data to be represented. And then they would analyze it and measure it. And it would be done only annually because there was no opportunity for them to keep collecting this data at frequent basis, right? So they had siloed systems, because of which they continue to have inconsistent representation of the data. And when the data came to them, a lot of time that was redundant data. So what ECA's ESG solution did is that we had in 8 weeks in and out within the organization. We finished implementing the solution within a span of 8 weeks, where we streamlined their end-to-end processes. So consultative management of the ESG is what we did. We integrated their data collection through our data collection layer and helped them craft customized visualizations for their different for the different frameworks that they wanted to report on. They were reporting on GRI, CDP, as well as SASB, and a local framework as well, which was relevant to their industry. So that's what essentially we did. Then in Southeast Asia alone, we also did for a public company, for a listed, one of the largest global shipping companies, Precious Shipping Corporation. We also implemented a solution there, and their challenges, while quite similar to the challenges of the MEWA group, which I talked about before, were of a different magnitude, right? And they own a multitude of different ships, operate multi-country through these multiple ports. So of course, their operations were more dynamic in nature, and a heavily manual process of collecting and analyzing data. They did not have too many systems that were mapping and helping analyze the data. And they wanted to comply with multiple different frameworks also, just like the MEWA group, whether it's GRI, TCFD, SASB, SDG, or CDP, right? So what we again did is that we helped them custom build a sustainability report, whether on GRI, whether on TCFD, as well as on CDP. And we were able to cover about 90% of the company's reporting requirements right through our sustainability solution on both quantitative as well as qualitative measures. And this again was done in a span of 10 weeks for this organization. So next slide. Right, so if we just have to summarize our learnings and key takeaways today, then there's been a significant effort in the last few years, as we see, in consolidating of the major frameworks. Natalie, when she started the presentation, she talked about how the journey has been in the last 20 years from a more general declarative to a very specific narrative now. So of course, there's a very vast consideration to standardize a lot of major frameworks. What happens with that is ESG reporting becomes more focused. When it becomes more focused, it becomes more nuanced, and therefore it becomes more complicated and exhausting for the users to report on. But we do see that just like ECA has a solution, there are a different multitude of solutions on digitalization frameworks that are there for smarter ESG reporting. Organizations that have had an early start are also reaping the benefits of this. Therefore, it is always advised to start ahead in the market, at least in your areas of specification. And of course, we talked about how ECA's ESG solution is very comprehensive, detailed, analytical driven, and has absolutely the 6 criteria that we need to meet for a digital solution or a digitally forward-looking solution. ECA solution has that. So how can ECA solution help in this journey for your digital advancement on ESG? These were our key takeaways for our discussion today. And then I open the session for Q&A. Ankit, over to you. Thank you so much.
Thank you, Shuchi, for the insightful session. So we have one question from the audience, but then I think we are on time, so maybe we'll try to answer Phil offline. So Phil will send you a mail offline on this. But again, I want to thank you all the audience for sparing time for the webinar, and also the speakers joining from different parts of the world for sharing the insightful sessions with us. This has been a good 45 minutes for me so far. Thank you all for the contribution again.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Thank you, Natalie.
Bye.
Thank you. Bye.
Bye.